this week, a volatile week for the markets with the Nifty ending up 3%. We will tell you what this means for your investment strategy. Ultratech Cement acquires the Gujarat unit of JP Group for 3,800 crore rupees. We will tell you what this means for the stocks that you're holding, and we'll finally discuss portfolio fundamentals with Hemang Jani. Welcome to All About Stocks. You're watching ET Now. This is a show specifically meant for long-term retail investors, which means that all of the calls you hear on the show today are for a 3 to 4 year horizon and not less than that. We've done all your research and picked the stocks that you will need to make money in the long term. All you need to do is give us the next half hour. Of course, before we go any further, let me remind you that we will answer all of your questions on the show. All you have to do is send us an email to the email ID that's at the bottom of your screen. You'll also find a copy of this episode on our Facebook page. Let me first bring in Ajay, my colleague, who's standing by to take us through what happened in the markets this week. Ajay, it was, we ended last week talking about all of the pessimism that we were seeing, and then it just turned around. The market has turned around. The rupee has turned around. Is it just all sentiment? What are you hearing on the ground?
Well, sir, that's correct. We have in fact added around 3% on the benchmark Nifty this week. Broader markets also gaining around the same time. But it has not been, one-sided move. It's been pretty volatile, I would say. 190-point range is what the Nifty has traded in for this week. So very choppy, but have added weight. Yes, you're right. Rupee was in focus. In fact, after strengthening to almost 62.90 or thereabouts, it has weakened a bit. And that led to a lot of choppiness. We also saw above 5,900, sort of closure of long positions. People who have made money past couple of weeks booking profits. So above 5,900 seems like Nifty is facing some kind of a resistance, and understandably so, because we have been gradually heading higher in the past couple of weeks. Going forward, a lot of caution is advised to our viewers and retail investors, because two big events are lined up. One, the new governor will, of course, the commentary from the new governor, because the credit policy is slated. Also, the US Fed meet, where expectations are running high that some kind of a tapering will actually start. Quantum may vary. So these are the two events which will, be on top of the investors' mind for the next week. This week, we have found a nice base around the 58.50 mark, because the IIP was strong, giving hope that probably economic bottom is in place, but inflation remains sticky at 9.5. So that is the kind of premise we are working with. But of course, next week will be quite volatile. Volatility index is already indicating at a high level. So investors should head into the next week with a little bit of caution.
All right, a little bit of caution for volatility. Ajay, stay with us. We're going to come back to you in a little while to talk about JP Associates. Don't go anywhere. And thank you for that update. Joining us now in the studio, Hemang Jani, the Senior Vice President at Sharekhan, who's been helping us with our stocks now for the last couple of years. Hemang, thank you so much for coming into the studio. Ajay was telling us volatility index is very high, which means that even though we've seen the market look so buoyant this week, it's possible we'll see cuts again next week. Give us your advice right now for retail investors. Assuming we have a 3 to 4 year horizon, what should we be doing at this point?
Well, clearly because of the important events lined up next week, and the fact that even in the domestic market, we would have an important policy meet. Overall, we think that because of the swift up move that we have seen in the last about 3 to 4 weeks, currently there is not a case for a significant up move in the market, and somewhere around maybe 6,000 or 6,100, market may form a short-term top. And investors should get an opportunity to enter back into the market over the next probably 2 or 3 months, because it's going to be event-heavy period. We'll have elections, announcements, and also the growth outlook doesn't look too great. So with that kind of a backdrop, one should be prepared to actually accumulate some of the stocks where there could be a good correction.
Well, you did mention the fact that the RBI governor will be holding his first credit policy meet on the 20th of September. What are you expecting? Are you expecting an interest rate cut? Because everything he said so far has, increased sentiment or improved sentiment so drastically. Do you think that's going to go even further and we'll actually see a cut in rates?
Well, clearly, given the fact that the inflation continues to remain at a high level, the CPI inflation data that we had indicates that it's at about 9.6. And also the fact that we had some important restrictions being put in place for the banking system, where the liquidity was curtailed to stabilize the rupee. So the first thing that the market is expecting is that those restrictions may be eased, so the liquidity is improved. And somewhere down the line, you would get a hint from him as to when the interest rates will be cut. But definitely in the next 2 or 3 months, market is expecting that we'll see about 25 to 50 basis points cut in the interest rates.
So in that case, where you see our banking stocks right now, the valuations that they're available at, especially banks like HDFC Bank, do you see opportunities to buy at this point?
Absolutely. I think we've seen a very swift up move in the last about 1 week or so. But if you look at the valuations of some of the private sector banks like Axis Bank and ICICI Bank in particular, they are somewhere close to about 1.2, 1.3 price to book, which are historically the lowest levels that we have seen. Part of that is because of the fact that technical factors like MSCI weightage was down for both Axis and ICICI Bank. But overall, we think that there are no major negatives even because of this short-term interest rate movement that we have seen. So we would definitely be looking out for opportunities to enter into some of these stocks.
We saw the IIP numbers spike up quite sharply in July. What does that mean exactly?
Well, if you look at the history of IIP numbers, they have been erratic, and one is not very sure of whether there is any kind of a trend building up or it's just an aberration, because only couple of items have actually led to this kind of a robust number of about 2.5 or 2.6%. The market would be more driven by some kind of a stability on the GDP or the earnings growth for the companies, where the overall outlook is still muted. So I would definitely wait for some kind of a trend to emerge there.
All right, and we've seen the rupee recover quite handsomely over the last 1 week or so. What does this mean for IT stocks? They're still holding up. They're not moving inversely like we had expected. What does this mean for IT stocks? What is your call right now?
See, definitely there is a bit of a relief on the INR front because of the steps which the new governor has taken. And fundamentally, we feel that if you look at the CAD situation for next year, it doesn't look bad, and we might have about $35 to $40 billion of CAD, which is definitely very comforting. At the same time, we think that the market is yet to adjust to the fact that the rupee has actually stabilized somewhere around 63-65 zone. So you might see earnings upgrades for a lot of IT and pharma companies, and actually there could be an opportunity to buy into some of these stocks when they are correcting at this point of time.
Give us 4 or 5 names of stocks that you would buy into at dips over the next 2 or 3 months.
Well, in the IT space, we definitely like something like Associates-Ultratech, and also to some extent Wipro, which is looking quite attractive from a valuation perspective. In the pharma space, we like Lupin and Dr. Reddy's. Both have remained pretty stable, but we think that market will be willing to pay a higher premium for a stable growth with a slight improvement in the margin, because a lot of these products are coming up for renewal, and there might be exclusivity for some of these companies. So these are some of the pockets which we would like to watch carefully.
All right, on your screen right now are 4 stocks that Hemang has picked for us. Remember, he said if you're a long-term investor for the 4-year horizon, makes sense to buy these stocks at dips, but remember to stagger that purchase over the next 3 or 4 months. We have a question that's come in from Vikreshwar, who's written in. He has 1,000-odd shares of JP Associates, which he bought at 65 rupees. He wants to know if he should hold on to that stock. Now, JP Associates ended the week nearly at 40 rupees, and we saw that big deal come in. I'm going to bring in Ajay, who has details on that deal. Ajay, take us through what happened and how it impacted both of those stocks.
Very well, it is actually a very big deal for the JP Group, because they've been trying to execute this deal for over a year now. It all started with CRH at a valuation of 4,500 crore, and 1 year down the line, after several rounds of negotiation with the Birlas, the deal has finally been executed at an enterprise value of 3,800 crore. Right now, JP Group definitely looks very distressed. They are sitting on a mountain of debt of 50,000 crore rupees on a consolidated basis. So 3,800 crore may look small in that regard, but it is a progressive step, and all the brokerages we've spoken to and sought reactions say that it's a step in the right direction. However, why the stock actually corrected from 47 odd when the deal got announced to around 40 was that it was a sell-on news, and this development was building in. But it will require many more such transactions from the JP Group side in order to substantially reduce the debt of 50,000 crore, and perhaps their power assets could be the next. There have been reports, and the management themselves have indicated that is the next asset which they are looking at to monetize, and in a series of monetization of assets, in that case the fundamentals of the company may improve in several quarters to come if this process sustains in the long term.
All right, Ajay, many thanks for joining us on the show and taking us through that big deal announcement, JP Associates and Ultratech Cement. Of course, for Vikreshwar, who has JP Associates at 65 rupees, does it make sense to hold on right now?
We think that JP is still having a huge debt on its book, and the company has been talking about liquidating some of the assets, but the process is extremely slow in the current environment. So we think that one can actually look at exiting JP and get into something like a L&T at this point of time.
All right. And while we're talking about that deal, we also have a question from Vikram, who has 10 shares of Ultratech Cement, which he bought at 1,909 rupees. He wants me if we should hold on to that stock. The stock ended the week at 1,720. Ultratech Cement, what's your call?
It's looking very interesting. This recent acquisition that they've done is at a good price of about $124 per ton, and this will make their capacity at 63 million tons, which is one of the largest in the cement pack. And yes, from a near-term perspective, in the next 1 or 2 years, things are not looking too great. But once the economy starts, showing good growth, Ultratech will be in a great position to actually capture or capitalize on this opportunity, because in the western coast, they would have a good amount of leverage with the assets that they've acquired. So we like Ultratech from a 2 or 3 year perspective.
He only has about 10 shares at this point. Would you like him to add more shares to his portfolio if he can?
Yes, he should actually accumulate over the next 2 or 3 months.
All right, so accumulate more of Ultratech Cement. We're going to take a very quick break. When we come back, we'll review Hemang's own portfolio on this show. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Hemang Jani is still with us in the studio, helping us figure out our long-term strategy when it comes to stocks. It's time to take a look at Hemang's own portfolio. If you watch the show on a regular basis, you'll remember that on the 4th of January this year, Hemang designed a portfolio for us on this show. Now, this portfolio is meant for a long-term retail investor, and he's picked out stocks, and we've been tracking this portfolio. It's currently at a loss of 7%. Compare that to the Nifty over the same period. It's down about 2.75%. That's nearly 3%. I'm going to take you through the stocks that Hemang has picked for us. Right on top is TCS, who's doing very well for us. Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Z Limited, Aurobindo Pharma, and Specialty Restaurant. Well, there was an opportunity there between SBI and Axis, and you had voiced the fact that you'd like to make a change there. Would you like to still make that change at this point?
There was a tactical opportunity because both Axis Bank as well as State Bank were available at the same valuations about a week back, and we think that given the kind of assets that SBI has in its loan portfolio, there could be some more pressure somewhere down the line. Whereas a private sector bank with this kind of a balance sheet like Axis has, overall growth potential could be much better. So there was an opportunity to actually shift from State Bank to Axis Bank, but in the last 1 week we have seen that Axis Bank has actually run up 25% as against State Bank, which has moved up only 10%. So we would wait for a better opportunity to make the switch.
All right. What about the rest of your portfolio? We know TCS is doing very well. Reliance Industries has given us a marginal return of about 2% since we bought it. Specialty Restaurant is down a little over 30%. Does that cause you any concern? Are you worried about it?
Well, definitely the extent of the fall has definitely surprised me, but we have very carefully selected very few mid-cap stocks in our portfolio with a long-term perspective, and we think that because of the cut in the discretionary spend and the fact that the cost controls are required at this point of time, the overall numbers may not look great for probably a couple of quarters. But we think that this entire segment will have a decent growth maybe 1 year, 2 years down the line. And we are extremely enthused by the kind of steps that the management has taken. They are actually doing their own expansion. The margins have been pretty stable. So we would like to give it some more time.
Also, L&T down about 23% since we bought it. On paper, L&T seems like a great company. You and I have talked about it now for 2 years, and you've talked about how it will turn around. It will turn around soon. Why aren't we seeing that in the stock?
Well, clearly the major concern is the fact that the entire capital investment cycle has come to a halt. New investments are not taking place. So if you look at the recent numbers of L&T, they have not been that great. Even their order book has not grown that much. So we think that till we see the economy bouncing back, this entire sector would go through a stress. But L&T, given the kind of the balance sheet that they have, the kind of diverse exposure that they have, we think that from a 2 or 3 year perspective, these kind of sectors will give you exponential return. So this is the time to accumulate a stock like L&T.
Maruti Suzuki, is that the best pick right now from the auto pack? Are you happy with the way it's doing in your portfolio?
Maruti is going through some stress because of the domestic, market, particularly the passenger car market is going through a lot of stress. And in the current environment, we think that Tata Motors is much better placed because their US market is growing at about 30% plus. Even Chinese market is doing much better. So in the short term, Tata Motors looks much better. But yeah, from a 2 or 3 year perspective, we think that Maruti, because it is already corrected, is giving a great entry point.
Alright, so you're not making any changes in that portfolio for now?
Not at this point of time.
No changes there for Hemang's portfolio. I'm going to give you a recap of the stocks he's picked for us. Remember, this is for a 3 to 4 year horizon at least. The TCS, Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Zee Limited, Aurobindo Pharma, and Specialty Restaurant. If you have any questions about that portfolio, feel free to write to us. Email ID is on your screen right now, and we'll take your question personally to Hemang. Alright, let's take a couple more questions on this segment. Sumit has written in 1,000 shares of MCX bought at 400 rupees. Should he hold on to it? The stock ended the week at 490. It rallied after SEBI renewed the license of the MCX stock exchange for another year. But there's been a lot of bad news in the space of commodity exchanges. Do you think it makes sense to hold on to that stock, or is this an opportunity to get out?
Well, it looks very promising because commodity exchange is almost a monopoly, is available at a market cap of almost 2,500 crore, and world over we have seen that the commodities, the overall transaction on the exchange is 10 times the equity volumes. And it's not going to be easy for anybody to set up this kind of an exchange. Yes, we've seen some kind of a dip in the volume post the imposition of the commodity transaction tax, but we think that once this issue is resolved over the next probably 2 or 3 weeks time, we think that a better quality management will be in place, and that could be a re-rating trigger for this particular stock. We think that it deserves a much higher market cap. So one who has a 2 or 3 year kind of a time horizon is a great actually opportunity to get into something like MCX.
Alright, let's take one more question. Raghavendra has written in, he has 1,000 shares of Manappuram Finance, bought at 18 rupees. Should he hold on to that stock? The stock ended the week nearly at 17 rupees. What's your call on Manappuram?
Looks like a low quality stock, and overall growth environment is not good because now the overall loan to book value would be much less. Also, because of the volatility in the gold prices, we have seen that there are issues of NPL, etc. So yes, from a valuation standpoint, it may look good, but the quality is not that great. So I would not be advising him to hold on to it.
Alright, let's take one more question before we go into break. Santosh has written in, he wants to buy shares of either PNB, Bank of Baroda or Axis Bank. Out of these 3 banks, which is the better choice? We did talk about the fact that you expect banks to turn around over the next few months when we see possibly the new governor ease up some of those rules. Between Punjab National Bank, Bank of Baroda and Axis Bank, is Axis Bank your best pick at this point?
Absolutely, Axis Bank looks the best. We've seen that the recent quarterly numbers were pretty good at 20% kind of a growth. Overall, on the NPL picture, Axis Bank too has some exposure to the power sector, but it has a much better diversified portfolio. So we think that the upside potential from here on would be much better for Axis Bank.
Alright, so Axis Bank is the pick of the lot over there. We hope that helps. Remember, if you have questions for Hema, write to us. Email ID is at the bottom of your screen. We'll take a very quick break. When we come back, we'll talk about Jet Airways, LIC Housing Finance, and CESC. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Hemang Jani is still with us in the studio, helping us make strong decisions about our money in the long term. Alright, it's time to pull up Hemang's report card. Now, Hemang recommended CESC to us in September 2011. That was 2 years ago when it was trading at 297 rupees. Give us a target of 413. That stock ended the week at about 320. Hemang, are you still positive about CESC? For those of our viewers who bought it then and are still holding on to it, what would you recommend they do with this stock?
I think it makes sense to hold on to it because in the bad market scenario, particularly for the power sector, the stock has actually done better. Yes. And it's on its course to expand its capacity, and recently even the regulator has allowed them to revise the tariff. So overall next 1 or 2 years you will see a decent growth coming back. So one can definitely hold on to it with the same target that we had given earlier.
Would you like to extend this target for another year then? When can we expect it to hit 413?
It should take about 12 months.
Another 12 months. Alright, so we're holding on to that particular stock. Hemang has decided to hold on to CESC and extend that target for another year. Remember, the target is 413 at this point. We're going to take a look at one viewer's portfolio. Our lucky viewer this week is Pranadesh, who's written in. He has these stocks in his portfolio and he tells us he's a long-term investor. He wants to know which of these stocks he should hold on to. Right on top on his list, 20 shares of Jet Airways, which he bought at 641 rupees. Stock end of the week at 376. Should he hold on to it?
He should exit when the final deal is announced and there's a spike in the Jet Airways stock.
Well, 40 shares of L&T Housing Finance bought at 245. The stock end of the week at 183. He's making a loss here. Hold on to that stock?
Yes, it makes sense to hold on to it.
250 shares of UCO Bank bought at 90 rupees. Now again, we're coming back to the banking sector. Does it make sense to get out and maybe pick a stronger option?
Yes, he can move to ICICI Bank. That's a better choice.
100 shares of Yes Bank bought at 283 rupees. The stock end of the week at 281. So he's almost on par. Does it make sense to hold on?
Yes, it makes sense to hold on to that.
And 150 shares of IRB Infra bought at 124 rupees. What should he do with that stock?
He could move to L&T. It's a better choice in the current environment.
And he has 10 shares, and this is the best part about his portfolio, 10 shares of TCS, which he bought at 805 rupees. The stock ended the week at 1,953. So he's obviously doing well, but can he hope for more profit from that same stock?
I think it makes sense to hold on to it. The stock can actually give a good upside in the next 1 year.
All right, so that's a wrap. Hemang, thank you so much for coming in. It's always such a pleasure to chat with you on All About Stocks. If you have questions for Hemang, write to us. Email ID is at the bottom of your screen. You'll also find a copy of this episode on our Facebook page as well. You can reach me personally on Twitter. Thanks so much for watching.